The hard thing in investing is not to find the data. It's trying to distinguish what's noise from signal. Now, when I went through some on-chain analytics, when I looked at macroeconomic factors, I found data that everybody talks about that's not relevant, and I found other data that nobody considers that I do believe is very relevant. Because here's the thing, Bitcoin has been living within a financial system that tended to expand. We tended to expand in credit, we tended to expand in debt, and we've never seen a massive crisis during Bitcoin's lifetime. But let me show you what I mean. A lot of people are hyper focused on the Federal Reserve. Is the Fed lowering interest rates? Is the Fed raising interest rates? What's the balance sheet? And when we look at the Fed balance sheet relative to the long-term Bitcoin price, so Bitcoin is in black, the Fed balance sheet is in red, we don't really see that much of a connection between the two. So the balance sheet can be flat or going down, and Bitcoin can easily do a 10x, and the balance sheet can go up while the Bitcoin price continues to go down. Same is true for the US money supply, M2. The top chart shows the year-on-year changes for US M2. The bottom chart shows the price change of Bitcoin year-on-year. Is there really a connection? We've seen massive price rallies in Bitcoin when nothing happened to M2, and we've seen M2 increases when nothing happened to Bitcoin. So it seems like it's not necessarily liquidity that's driving Bitcoin's price. Sometimes people in traditional finance try to use bonds or the return on bonds, short-term bonds versus long-term bonds, to find out what the market in general thinks about the economy. When long-term bonds tend to return less than short-term bonds, then the market is believed to rather be pessimistic. And if we are suddenly going to hit a massive recession again, this could potentially also impact Bitcoin's price. Now, how well do those bond indicators work? I am not so sure. So we have seen a flippening where suddenly the 2-year bonds tended to return more than the 10-year bonds. That happened in July of 2022. And if that was your time where you sold your S&P 500 stock, you would have not done too well. The S&P 500, since that reversal in the bond market, went up by almost 40%. So this is also not necessarily the best indicator. This needs to go to 1 million, or March buyers now will make millions. This is how you get the clicks on YouTube, but this is not how you beat the market. To beat the market in crypto, you need to be better informed than the rest. You need to be better skilled than the rest. You need to do better blockchain analytics. You need to track other people's wallets and know what is the smart money doing. It's the boring educational content that forms skill that doesn't perform so well on YouTube though. That's why I created the premium membership. Feel free to check it out. We are tracking influencer wallets to find out what they are buying before promoting this on YouTube. We've got a lot of tutorials to help with on-chain analytics, to help with wallet discovery. And of course, there are also plenty of chats where we help each other, and also one-on-one conversations with me. So I'm messaging every premium member one-on-one directly. Once you're joining, you will get a message from me and you have the opportunity to directly pick my brain. Feel free to check it out, thebitcointrader.com, link is down below. So I kept on searching for something that might work, that might be somewhat predictive of the long-term cycles. And here is a very interesting metric. This is the American debt to GDP ratio. How much debt is there out there relative to the productive capacity of the US economy? And since birth of Bitcoin, this tended to increase from initially 91% to now 122% of GDP. And so let's do something. When in doubt, zoom out. This is a very long-term chart of the US debt to GDP ratio. We are now very close to all-time highs with our 122%. Now there are 3 vertical lines here, and I want to compare those points in time with this chart over here. This is the S&P 500 relative to US money supply. Now we only have data of the US M2 money supply since 1959, so this is where our relative valuation chart starts. But what we can see here is that during the 60s and 70s, relative to US money supply, supply, the S&P 500 went down by more than 60%. And that was during a time when the debt to GDP ratio went down by 40% roughly. So it looks like during times when government spending tends to contract, that stock prices also tend to do not as well as monetary expansion. When we then look at the 80s and 90s, we're seeing how the debt to GDP ratio went up by 76%. And we also see how the S&P 500 relative to the money supply went up. Here the increase was even by more than 300%. Now subsequently we had the dot-com crash and the global financial crisis, and Bitcoin was born out of that global financial crisis roughly over here. So during the lifetime of Bitcoin, stocks tended to outperform monetary expansion. The debt to GDP ratio tended to rise. We also see this over here in this chart. And so the big question is, what's going to happen from here? Is the government forced again to spend less, since we're already that high on debt to GDP? Because that's the idea, right? We can't have unlimited debt relative to the value that's being created. Otherwise, all of the taxes that are being collected serve just towards debt payments. So there's a limit to how much debt can be accumulated. And again, if we're now going to see a contraction of that debt, and we see something similar to the 50s, 60s and 70s, while the S&P 500 underperformed monetary expansion, then maybe that could lead to a contraction in stock prices as well. And as an extension of Bitcoin being a risk-on asset, potentially Bitcoin could also see lows that nobody is expecting so far. I'm not saying that this has to happen, but I simply just want to share the data that I found, right? When we now see that debt to GDP is super high and that it might come down over the next 1 or 2 decades, who knows what happens with Bitcoin during that time? There clearly seem to be cycles that are longer than just a few years. There clearly seem to be cycles within all of finance that are longer than Bitcoin's existence has been so far. So far, since Bitcoin's existence, we have been in a fairy tale land. We have seen how pretty much everything went up in purchasing power. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. Feel free to also, of course, share this with your friends. In case you've got Telegram, then you are more than welcome to join us. The link is down below. It's 100% free. Looking very much forward to chatting with you. Cheers.